Hey, welcome to this video. If you're arrived here, probably looking for a view of high yield investing. So I'll go over how it works and give you my 2 cents, whether I think it's a good use of your time. I'm always coming out with videos like this, so consider subscribing. And if you'd like my free training, the number one simplest, fastest way to earn a full-time income from home, all you have to do is click the link below. You'll see my email opt-in page. Enter your best email. I could send you by free training if you want. High yield investing. Let's dive in. So what this is, basically, it's a newsletter that focuses on high yield dividend stocks. And dividends, if you don't know, are period payments made to shareholders of certain publicly listed companies. And the pros of investing in dividend shares are they're generally quite safe and reliable, and they're pretty passive. The con is you need a lot of money to invest. If you're quite young, at least $10,000, and then it will grow over the years, and eventually you can use that money in your retirement. If you're older, as in you're already retired or you're getting ready to retire, you should have at least $500,000. So now the editor of, if you're going to use it, as an income, as your primary income source. Now the editor of high yield investing is this gentleman named Nathan Slaughter. He studied finance at University of Arkansas. He has all the certificates you'd want in a financial advisor, series 6, 7, 63, 65. He worked on Wall Street for many years for some of the well-known companies before transitioning to becoming a stock investing writer in 2004. I don't have access to all the stocks he's recommended over the past 18 years, but if you go to TipRanks, you can see he has a 69% success rate, which is actually quite good. And this is another website I found of his, one of his sales pages, and I'll go through all of it, but he talks about the main criteria he looks for when choosing a stock. So he talks about the company should have a proven business model, surplus cash flow, expanding bottom line, conservative shareholder-friendly management team, and it should be weatherproof business as well. So it seems like he's pretty selective with his picks, and he aims for at least a 5% yield, which most companies are definitely less than that. So to work out the dividend yield, you would simply, I don't want to get too technical, but you would divide the company's dividend payment per share by the share price. So if a company pays a $3 dividend per share and their current share price is $100, the dividend yield would be 3%. And then if you have a million, you'd be earning $30,000 a year, 3%. So now as far as, if it is 5%, you'd be earning, make the numbers stay the same, you'd be earning $50,000 a year. As far as what you'd be getting with your newsletter purchase, well, three things. So of course the newsletter itself, which is, it'll come to your inbox once a month. It contains new investment ideas that have high yields, dividends. Also, you get updates and alerts. There's a mid-month update on if there are any changes you need to make to your portfolio, and special alerts if something happens in the market that you need to adjust for. Lastly is special reports. These cover specific companies or investments that he's currently bullish on. Now, the price of the newsletter is $39 per year or $78 for 2 years. The second option comes with some additional bonuses. There's a 90-day refund policy. Overall, it's a great newsletter. It's an established company. They've been around since, Street Authority's been around since 2001. The newsletter has 3.8 stars on Stock Gumshoe, which is, it's kind of like the Trustpilot of investing newsletters. Anything above a 3.5 is generally worth checking out at least. So you can go ahead and check this out if you want. Just understand with any investing you're doing, whether it's stocks, bonds, mutual funds, dividends, real estate, precious metals, even crypto, investing is a long-term play. What you want to think about, so buying and holding for the long term, the next 5, 10, 20 years. Generally speaking, I guess dividends are a bit different, but depends where you're at. But a lot of people, they think they're going to come in without any, and also you need money to start with. So if you're on your last dollar or you're struggling to put food on the table, maybe you're living paycheck to paycheck, then you shouldn't be investing at all. You need to figure out a way to increase your income. And here's kind of the here's something I learned from my mentor. It's called the wealth cycle. So most people jump immediately from step 1 to step 2. They'll take whatever they have left over from their job, paying all their bills, and they'll invest all of it. You don't want to do that. What you want to do is take that, put it into a business. And I recommend an online business. Now, why do I recommend that? Well, see, with most jobs, you're not earning that much, right? I mean, I think the typical income is like, let's say it's $5,000 a month. Well, you're probably not saving that much. I mean, yes, if you're, a heart surgeon or an investment banker, you have more to play with. But for most people, they are more or less living paycheck to paycheck. And you only have so much control over your income. So what you want to do, put that into an online business that can pay you, $10, $20, $30,000 a month. And then you have a lot more room to set, a lot more money to set aside to put into investments. Because with investments, it shouldn't be money you need right now that you're going to starve if you don't have it. It should be kind of an additional thing, like a protective mechanism. Now, if you'd like to learn about the online business model I suggest, what you can do is click the link below. You'll see my email opt-in page. Enter your best email. I could send you my free training if you want. And that's basically it. I hope you enjoyed this review of high yield investing. I hope to see you on the other side of that link, and I hope you have a great day. Bye.